Good morning. It's November the 17th, 2015. Time to kick off and start another trading day. I want to show you all how to get to Don Manning's recordings. Let's try to put this to bed. First, you go to Charlie's Room, Templates. So right up here, cnfuturestrading.com. You have to be a member to get to this link. Then you come down to Charlie's Chart Templates right here. Then you come down to Don Manning's Chart Demo right there. And you left click on it. And it is a YouTube recording. It should pop right up and get right down to it. Don Manning said he will do another one in the future. I think I've figured out how to get it recorded from my end, and that one will be available for cleanup, etc. through Camtasia, unless I screw it up again. So let's get started. Today we have news that can impact the trading. CPI plus 0.2. Core plus 0.2. Industrial production plus 0.1, and industrial production could come in less. And if this isn't the definition of stagflation, I don't know what is. Have very, very low economic growth, and you've got inflation. And if anybody has gone, we see what happens to the cost of raw materials and goods. You're not seeing it in any of the retail stores or outlets, or at least I'm not seeing it. Food continues to go higher. You go to buy any product at Home Depot made with copper, steel, other stuff like that, it's not going lower. Everything is going up. So we're in the Japanese experience, and I think that's most likely. And Japan's been there since 1992. And you ask, how long can this go on without a break? Japan's GDP debt ratio is 4-to-1 right now. We've got a long ways to go, and Japan's been in it since 1992. And I think long term, the Argentinian experience, if we get through this Japanese deal, then ultimately you come to a point where you can no longer borrow or do that, even if it is to yourself. The rest of the world won't play. And then we've got Argentina. Now, the apocalyptic headlines and stuff sell. Get your survival food, buy weapons, do all this stuff. The collapse is coming. There'll be blood in the street. But if you look at it on a historical basis, stagflation is where we are right now. We got the Japanese experience, and then Argentina is the most likely. And people forget, back in the 30s, Argentina was the 4th biggest economy in the world, and look what they've done to themselves over these years. Okay, industrial production plus 0.1. Capacity utilization 77.5. And NAHB housing index at 64. Industrial production could come in lower than forecast. I think inflation will probably be there. It could come in lower than forecast given what's going on in PPI. Over the next 5 or 6 months, you'd expect it to come in lower than forecast. The housing index probably will come in at 64. Those guys are optimistic. They go break ground. Sales are great. I'm going to break ground on another one. I need a construction advance. That's usually 30%. And that's how developers and contractors and builders stay in business. Okay, resistance could be at 20. Last rotate up in V period was 19. Definitely starts at 24 to 28. We're currently at 17. I would like to get the sell done against 24, but it may take a 19 to get into it. And it's all going to depend on what the E-mini does today. Then 27 to 31 will be sell 2. On the buy side, I think we're headed a little lower here. I think we can buy it on the cheap, so 9 to 13 is buy 1. But it may take a 17 to get in. Just depends on what goes off with the early news this morning. And then 1 to 5 for buy 2. And we'll talk about it. One of the things we have to deal with this week is option expiration in the E-mini, and yesterday's plays within the 2060s. And typically the market rallies into option expiration as a short. Those that got short have to buy their way out of their positions. And that's where we find ourselves. Tomorrow and Thursday, bigger, but we need to anticipate, strategize, think about it before it happens. You know what I mean? Well, I think so, Charles. Okay, looking at the 30-year, the knob spread hung in about where it was on yesterday's close. No big changes there. Last rotate up was 10. We're at 5 right now. Got this spill from 17, so 11 to 15, so 1. And 20 to 24, sell 2. On the buy side, I think we can go a little bit lower, 29 to 01, buy 1. But again, it's going to be down to the direction of the E-mini. And 17 to 21 for buy 2. The E-mini rallies today. Treasury should sell, but I don't think the bottom falls out of the market because of what's going on around the world. If you listen to the talk that came out of Turkey yesterday about what we're going to do and how we're going to do it and all this other good stuff, it doesn't give you a lot of confidence. I mean, Russia, Iran, and Syria are probably taking the biggest steps to contain and stop ISIS, although they will get to ISIS after they take out those that are opposed to Assad. Why is Russia doing this? To gain a foothold in the Middle East. Why is Iran doing it? To protect their hegemon from Lebanon all the way through Iran. Why is ISIS getting funded? They're being funded by the Persian Gulf states and Saudi Arabia. It's the Sunnis versus the Shias. And Russia's there to make sure that they've got a foot back in the Middle East, which has been denied to them really for the last 70 years. Okay, I still think we're headed for stops below 72.50. Right now, deficit support is at 75, so that's buy 1, 75 plus or minus. Then 70 is buy 2. And stops are right over there, and everybody knows it. Why could gold be selling other than central bank pressure, manipulation, deflation? Okay, Asia stopped at 83, so 83, 85, sell 1. 89, 91, sell 2. Gold has been a very, very reluctant sell. I mean, it gets whacked by a central bank. It makes big moves and just kind of sits there in a slow grind lower. And that's because everything that can be fabricated and stamped and put out there in the coin form or bullion is being snapped up by central governments and the retail account. That's not going to change. The ideas that have taken you to gold and silver are still on the table, and they get worse every day. Okay, looking at the euro, headed lower. Last night we had the 106.50 area, and then 106.25. It's definitely a B. It is definitely pointed lower, so we'll open it up. 50 might be the play. Put a question mark at 50. I think we'll get stops below 50, so 625 buy 1, 106 even buy 2. Goldman has told us we're going to 95 sometime in 2016. 75 sell 1, pretty aggressive. But we do like the short side better. Sell 2, 107. Okay, crude oil is telling us that there's very little chance of supply interruption with all the stuff that's stored above ground. I mean, even if bombs started to fly outside of the normal area like Syria or Iraq right now or Afghanistan, that don't think that it would have its normal effect on the market. So we got a seller at 42, 42.50. We have a buyer at 40 to 40.50. That's a $2 trading range. That's where we are right now. We have rejected prices above 41.63, so 41.50, 41.75, sell 1, 42, 42.25, sell 2. Last rotate down yesterday stopped at 48. See at 40, basically 40.50. H stopped at 41. So 40.50, 40.75, buy 1. 40 even, 40 1/4, buy 2. Since we took out 42.50, we've said stops below 40 was the next target. We take that out, then stops below 38. And the E-mini. Okay, yesterday's big play in calls were the 2060s. 2100's a big number that's out there. 2075, so 2050, 2060, 2075, then 2100 on the calls. Puts, the big play yesterday was 1900, if you can believe that. Probably pretty cheap insurance for what's going on right now, and it shows you how wide spread the large institutions can play. We talked about yesterday the 57, 58 area, pretty clean. Right here's our 61. Right here is the spill up there on that at 64. So 60, 65 is pretty good resistance. Last rotate stopped at 58, so getting stops above the overnight session high, I think, is a reasonable assumption starting out. If we get through the 65 area, there's no reason not to think we're going up to 75 right up in here in this area. Lots of wood to chop and get through before we get there, but that would be the next stop that I would see. So option expiration 2060, 75, and 2100 was the play. Yesterday's play was 2060. Hard to believe it. 1900 was yesterday's play in puts, but the puts are actually 2050, 2025, and there's some at 2075. So right now, if you were to look at these puts at 75 and the calls at 75, I think 75 will cap the rallies. That would be a number to lean against. Might go for stops up above that, and then beneath us, it's pretty hard to see us taking out 2000 without some help from the news. Okay, on the buy side, got this extension up in P. We've got 53 right here. We're there, so 2050, 2052, buy 1. And then 47, 45, buy 2. Option expiration, there's a lot of money that's bet on that. There's a lot of money that's put out. It's where the large institutions do a lot of their insurance these days as opposed to futures. You can go put your money up, you know how much money you're going to lose. You can go back and study your portfolio and see how much protection you need based on your deltas in futures and the beta of your portfolio. So, and the Fed used to really love options. They do it more in futures now than they used to. Okay, that's all I have for right now. It's going to take a bit to get everything up and posted. I'm going to get busy on that. I will be back with you as soon as possible.